I work for a company called the Sovereign Group. We've had a presence within the market since 2003, and we work with foreign companies that are looking to understand the market better, as well as helping them with actually entering, with setting up their presence, and then also with back office support services. Well, I think actually Canadian SMEs and all SMEs, especially Western SMEs that are looking to do business in China, or in particular looking at establishing a presence in China, some of the main concerns, or actually one of the biggest concerns that I see, is being able to find senior management commitment. In other words, they're able to have the internal resources or depth of management that they can actually send somebody over to spend time within the market. And that may mean that they spend 6 to 12 months here helping with launching the initial presence within the market and helping groom and understand the local employees that you're hiring, but also looking at ways of better understanding how you integrate your China operations into your headquarters as well. So after all, once you start moving into other countries, you're no longer going to be just a Canadian company. You are now going to be an international company. So striving for and focusing on ways to integrate and start looking at yourself and managing your company more like an international firm is one of the greatest challenges that we see for a lot of our clients. And so unfortunately what happens with many firms, in particular the ones that fail here, is that they have relied on hiring a local general manager. They fund the company, and then they just expect that this general manager will then run it themselves with very little supervision or contribution from the parent company. And time and again, this is typically one of the major reasons why we see companies that fail within this market. So making sure that you make that initial senior management commitment, and not just the financial commitment, but the resources within your company that you can also commit to the market is going to be very important. After all, there's a reason why your firm is being successful in Canada and other markets, and part of that is your culture, your business culture, and that's going to be a key component of what you're looking to adapt within China as well. Outside of that, I would say that keeping a critical mind is going to be very important as well. There is no such thing as a China expert, though you will find many people who might represent themselves as one. No one is able to understand everything about this market, and so it's important that you are looking at multiple resources to generate the information that you need to make informed decisions within this market. And that really means not only foreigners that are fluent in the language, but also local Chinese that speak English. You might hire an engineer that is helping you with part of your business, but that doesn't mean that engineer understands the tax code or the labor laws within this market. And there's no reason why you should expect that, as you would not expect that in Canada as well. And then I think, and finally, one of the things that time and again clients encounter is this idea that that's how it's done in China. And oftentimes that phrase, "this is how it's done in China," is something that is used essentially as a cognitive kill switch. In other words, it's a way to end the conversation. And in reality, it really should be the beginning of the conversation. That should be where you're exploring why that happens to be this way. And so that's something that I think SMEs that are looking to enter this market should be really considering. How does this, this way of thinking or this behavior that I'm being told that I need to follow make sense in terms of my business? The Shanghai Free Trade Zone, in its current form, was actually established in September 2013. In fact, there was a free trade zone even before that, and it was in an area called Waigaojiao. A free trade zone really is just an area that facilitates and encourages export of goods that have been produced here or produced in China. But in 2013, the government wanted to essentially use the free trade zone and expand it, and expand its mandate as well. In particular, they were looking at ways to use it as a laboratory, if you will, to experiment with new reforms that they would then eventually start to introduce nationwide. And in fact, that's really what it's been used for the past several years. And so a lot of the reforms that have occurred that were introduced in the free trade zone have in fact now actually gone nationwide. For example, the reduction or the abolishment of registered capital requirements, and then also the expansion of the timing that a company can invest all of their registered capital. All of these things first were initiated within the free trade zone, but are now actually nationwide. So the free trade zone still is very effective in terms of the government using it as a way, again, to try new reforms. And also it is a place where they have introduced certain reforms in terms of industries that foreign investors can engage without actually having necessarily to have a joint venture with a local partner. So there may still be some opportunities for foreign investors within the free trade zone, but a lot of it's going to have to do with whether or not you're engaged in one of these sectors or an industry that is restricted to only being operable within the free trade zone.